Welcome to TradeNBA.com. This is John. This reports for the 22nd. Well, we got confirmation of exactly what we expected, but we've been talking about this for quite some time. And if you're wondering what I'm referring to, of course, it was the job numbers being manipulated, or as they say, just in a relative incompetence. That's the new narrative. And it's important to realize that all of this is narrative driven. It's not incompetence. We knew that the states were reporting numbers that didn't match the national numbers. And I talked about this at the beginning of the year. They didn't want to indicate that things had moved into a recession earlier this year, which they had already started. Now, it was mild so far, so hardly something for them to be that paranoid. But again, this is the whole play out now. Of course, at the DNC, you had the Commerce Secretary who said that it was Trump who manipulated the numbers. Don't even know what that's supposed to mean, considering they've had control of them for the last 3 years. And again, they wanted a narrative that the economy was growing, the Bidenomics were working, and that despite the inflation that didn't exist, remember how that one was, that there really was no inflation, or now there's none. And yeah, it's all a bunch of baloney, and I've been talking about it for quite some time. It's not relevant because, again, the market was going to be moving up anyway in the election year, and it hasn't stopped doing that. If we're looking at our chart right here, still approaching near highs, hitting some resistance up against the ABM yellow. I'm going to break above it, and that's all it's going to take. It's still tough with the DOC spread here, and then we saw the steel crossing below, so we knew that we would expect some degree of softness within it, but you still had Magenta well above, and fine. We did pretty well, relatively speaking. Came up to the ABM resistance. It's not strong enough to break it because of that, but okay. So, but again, people worry about, the headline, and, market traders are upset because some people got the numbers privately through phone calls when they didn't release it. It's all orchestration. It really wasn't irrelevant. Now, can the Fed do anything with this? It's a tough situation because, yeah, fine, you've got the labor change, but you also still have inflation running hotter than their relatively desired range, which means what? Well, you can cut into that, but then you're only going to spike inflation and create the same cycle again. Not really effective. The bigger question is when you're spending $1 trillion every 3 months and having negative or at least almost non-existent job growth. That's a better question that most people aren't going to be asking or even talking about, and it becomes problematic. Now, people say to me, "Oh, you're very cynical." Really? When's the last time ever a president had a debate prior to his own convention? Come on, these are some obvious questions. It's never happened because there's no reason for it to ever happen. There was never any reason, but you had to sell a narrative, and they needed to convince people that it's like, okay, well, look, how do we replace Biden? Well, this is how you do it. So was that cynical? Come on. Really? Yeah. I hope you appreciate it. That was Joe Biden's. Come on, man. So anyway, it doesn't change what we see. Pretty clear here as well. NQ pushing right up against the same resistance level, which happens to be the lower one of there. Now, of course, you have all these companies talking about political headwinds as well as difficulty with the consumer going forward. Yet the statistics are saying that the consumer confidence and everything is just fine, and that spending is good. So take it for what it is. What we do know is bond market is projecting, and has been for quite some time, interest rates far lower than what they're currently at, and it hasn't materialized. And given what they can see in inflation, they're trading opposite to reality. It hasn't fared so well for them. Yes, they've had these moments of spikes, but they've always suffered these big drawdowns from it because they've been incredibly wrong. Because at the end of the day, you can't ignore actual reality for too long. You can do it for a while, but at a certain point, things build up. And I even said this before about the Fed, and they can get away with it for a while because it takes months for some of these things to unravel. And now it has. Now, of course, people are all going to be saying that they tightened too long. I would argue they tightened too late, which meant that they were already behind the curve. And certainly, they would be better off at this particular stage to do nothing until they can see a situation like this, which is actually moving in their direction, oil breaking, and if it can get below the 70 level, well, then they may have a justification in a month or so to be able to do it, but can't do rate cut with inflation climbing. That's a recipe for future disaster. Now, of course, it depends too on the political winds. If they think that Kamala is going to lose, they may go ahead and just leave it as it is and not do a thing. But if they believe that she's going to win, and I think that that's the calculus that most people are going with, they have to salvage things, because if it gets ugly and ugly fast before an election, which is just under 80 days out, yeah, you got an issue. Now, of course, for a euro, this is a boon because it's suggesting that the U.S. is just going to cut rampantly, and that's where the euro is trading at this particular stage. Not a whole lot of justification for it. That doesn't change anything, nor does the reality that gold is at epic high when it should be fading, given what they're saying, that there is non-existent inflation, because at the end of the day, real money understands that that's not necessarily the case. Cryptos and that, they're pushing up against their various resistance. Of course, Mt. Gox released even more Bitcoins to other wallets and that. Once there's a stabilization, though, barring any new scandals or whatever, I think you can see cryptos will take their place at that particular point. But at this time, it's just been central banks and gold taking on the situation. Now, from a relative standpoint, when we look at our charts, has this meant a whole lot of anything? Not so much. We did get some nice MBI white spikes here. Now, those will play out. That's going to mean a move towards that 50% when we do get a corresponding magenta breakdown in that. And it can happen a little bit quicker, but just take a look at that. Cyan under red, full steel reset. As long as those conditions remain, you're not going to have a dip. Just plain and simple. You have to go back over to here. You can see. So once that cyan gets back above red, and then you get a normalization of steel starting to climb. And that once that crossover here, that steel to the orange usually is that trigger point, and that begins your decline. So until that happens, just keep going with what is. And what is bright and shiny, up, up, and away. Just enlarge that screen there. We don't need to see all that data. That way you can get a better view. Let's do another one. And there we go. So we're caught again right between these ranges. It's going to take a little bit of time for a buildup to take place, and then they'll be all set with that. Of course, intraday from a volatility standpoint, pretty decent, as everyone, interestingly enough, even without the numbers, the market reacted. Yeah, so that's just the algos. They were set to trigger at a specific time anyway. So despite the fact that you didn't have the numbers coming out, it triggered anyway. And it just points to you that they use the news and that as a narrative to justify the application of creating the imbalances. And that's the way it works. And so finally bottomed out there. And then, of course, flipped around when they tried to get enough short activity into it. And boom, rally it back up. So end of the day, all clean, all happy. Everyone was nice. They filled back in a bunch of that during the post-market here in Europe, and we're near the highs of the European session at this particular stage. So long-winded, nothing is as it seems, no surprise with that. And it's just a confirmation of everything I've been telling you for quite some time. So take it for what it is and just continue to trade the paint bars, and everything will be good. As always, have a good one. Trade well, anything relevant, I'll put on the Skype chat.